Alrighty, well, good afternoon and welcome everybody. Thank you for joining us today. My name is Andrew Daphne. I'm the Instruction and Outreach Librarian at the New Jersey State Library. And it is my pleasure to welcome back Amanda Griffith, who is the Financial Wellbeing Impact Officer and a Certified Credit Union Financial Counselor for the Credit Union of New Jersey. Today, Amanda is going to be talking about credit. So the title of the program, Understanding Credit, she's going to go over what credit is, kind of what makes up your credit score, and then how to protect yourself, your identity, and your credit from a lot of the scams and other things out there. So it's going to be a jam-packed presentation. I can't wait to get into it. And before we do, I just have a few housekeeping items to go over. You can submit your questions at any time using the Q&A or the chat button in the Zoom dashboard, and we'll be addressing them, I think, as we go. We'll be stopping periodically to address any questions that you may have. If you do have questions that are about your own personal situation, Amanda will be providing her contact information at the end, and I would recommend that you reach out to her directly. That way, we're not trying to share personal information or anything like that in this program. At the end of the program, there will be a brief survey available. So if you have time, we ask that you please complete the survey. We really appreciate any and all feedback that you can give us. And if you want more information about credit, you can visit the FTC's website at the web address on the screen there. I will send that out in the chat so everybody has a live link to it. That's going to cover, again, a lot of what Amanda's already going to cover and provide with some other resources that in case you want to follow up on anything. And then one last thing, this should be the dashboard that you are receiving if you're using a PC or a Mac. If you're using a mobile device, the dashboard will look a little bit different, but all of the features will still be there. In the bottom left-hand corner, you can check your audio settings. So if you're using an external listening device like a headset or earbuds, you can check to make sure that it's connected properly. At any point during the presentation, if you have any issues, there is a raise hand button here in the middle. You can click on that and that'll alert me. I will send you a message in Zoom and hopefully be able to resolve any problems that you are having. Excuse me. But as I mentioned, if you do have any questions, the Q&A or the chat, you can use either of them and get in touch with us and we'll be happy to address them for you. So that is everything that I have for you. So I'm going to turn it over to Amanda now.
Thank you so much, Andrew. Let me share my screen. Share that. Okay, slideshow. Okay, and everybody can see, Andrew, you can see this understanding credit?
Yep, looks good.
Perfect. All right. Thank you guys so much for joining me today. Again, my name is Amanda Griffith. I am with the Credit Union of New Jersey. I am a financial well-being impact officer. I'm also a certified financial counselor. And what I do is really just go over credit review, your credit report. I try to help do credit freezes if you have issues, if somebody, stole your identity or if you have issues, anything like that at all. I am here to help you. I'm also here to help even if you're looking to do a budget or something like that as well. But we have a lot to go over today, so let's get started. Again, it's going over understanding credit. So we're going to go over, all about your credit report. We're going to go over, different places that you can go check your credit score. We are going to go over what is in your credit report. Why does good credit matter? And how does credit work? So a lot of people, I don't think, understand, how credit works. You could be somebody like me at one point where I thought a score didn't run my life. I was really wrong with that um, because a score really does run your life. And there's a lot of reasons why they check your credit score, even when you're trying to get a job, but there's so many different things. So first off, we are going to go over why does good credit matter? The credit matters because it helps you with car loans. It's going to help you with mortgages, credit cards, personal loans. I think everybody on here has applied for some sort of credit. If you either got a mortgage, if you got a car loan, maybe you went and got a credit card. It's very important that your score and you know what your score is before you go in to even apply for any of this stuff. So my first thing to say is if you are looking to go and get any kind of credit right now, if you're looking to get a credit card, if you're looking to go maybe you want to buy a home one day, or you really want this new car, the first thing everybody should be doing is making sure that you're checking your credit score, reviewing your credit report. It's very important. There's a lot of identity theft going on. There's a lot of false information that's been on credit reports. So if you learn anything today, that's the one thing I want everyone to do. I am going to send you to a website that I really want you to check out. It's the only place I really send anybody to check their actual credit report. You are allowed one a year, and it's completely free for you. Why does good credit also matter for your insurance? They actually look, I go through NJM, they look at our credit scores in order to see how much you're going to pay. Very important. Do I believe your credit score should matter towards insurance for you driving a car? Not really, but that's what they go by. So just make sure that you are, like I said, if you're looking to buy a new car and you're looking to get insurance on that, make sure you know your score. Employment opportunities. They checked me before I even became somebody at the credit union or banking system. It's very important that your credit score is okay because they're going to understand why would they put you in a financial institution if you're unable to pay your bills. So these are things that you have to look at if you're trying, if you're even coming out of college, maybe if you're looking to, maybe move jobs, make sure again, you're checking that credit score. Housing options, very important. If you're looking to get a mortgage, you want to make sure that you're, increasing your credit report, your credit score within 6 months before you get that home. Because I don't know if anybody realizes when you do go get a mortgage, they actually go by, if you're actually co-signing with somebody, maybe your significant other, your husband, your wife, whoever, they go by the lowest score first. So they're taking the lowest credit score first on your mortgage, and that's what they go by. So you want to make sure whoever you're co-signing with, whoever you're getting a house with, make sure you're checking your credit score as well. So your credit report is Equifax, Experian, and TransUnion. These bureaus compile and report information. They have payment history, public records, personal information. They look at all the inquiries that have happened on your account. And this information is used for credit and other business decisions. You have to remember what I do every year because you're allowed one a year. I do Equifax in January, Experian during the summer, TransUnion at the end of the year. You can do one every single couple of months. So like I said, that's how I split it up to make sure that I have no fraud or identity theft on either one of them, on all three of them. And you're able to go on to those. Make sure you're checking addresses. Make sure you're checking, where your job history is. Lately, we've been finding out that addresses on your credit report have been wrong. I have seen maybe about, God, 15 to 20 where a fake address was put on your credit report, and it's absolutely crazy. We're not understanding why. It has been reached out to Equifax, and we're still waiting for an answer on where these fake addresses are coming from. So, like I said, again, please check your credit report, check your addresses that are listed on there. And if you see one that's really weird, make sure you go back and you let Equifax know. You just do a dispute and tell them, I've never lived here before. Please take it off my record. Like I said, again, they are trying to look into why there are fake addresses on our credit reports, and we're not really sure what they're doing or who did that, but they are trying to get rid of that for you. So I just want to show you too, a lot of people don't understand the power of time. The most negative info is reported for 7 years. So my big thing for everybody here is if you have kids or grandkids, the greatest thing that I love doing is financial literacy and teaching children about money, even teenagers, because you go into college and these kids are getting a credit card maybe when they're walking out of their college dorm. There's all bunch of credit card offers and everything. You get your first credit card. Oops, I forgot to pay. Well, your negative information is reported for 7 years, and a lot of people don't understand that. It's a long time. You have to wait for that to drop off. Chapter 7 bankruptcy is reported for 10 years. Sometimes we have to actually file for bankruptcy. A lot of people have done it. I have done it at one point in my life, and that's why I like teaching people about credit because I didn't understand it. But, Chapter 7 does report for 10 years. It's very hard to get a loan afterwards. You have to literally rebuild all of your credit again. And what bankruptcy does, it wipes everything away. So your history, all the types of credit that you used to have is gone. And you're trying to rebuild your credit all over again. And they're looking at you and no one wants to give you any credit because why? You don't have anything. So you want to make sure that if you are ever looking into bankruptcy, that should be your last resort. But just make sure it is reported for 10 years. Collection accounts are reported 7 years from the date of the first delinquency on an original account. Positive information that remains indefinitely. But when you look at your FICO score, so how this all works, it's kind of confusing. I had to learn about it too. So your credit report is through Equifax, Experian, and TransUnion. There are three separate companies that send your information to FICO, which is another company. And they take the 2 years of activity that you've done and they give you a score. So there's four separate companies in play right there. That's how it all works. So just so you know, like if your credit report, you want to make sure that you're looking at it, but you want to also know what your FICO score is because we go by that score to, approve and see what your interest rate's going to be for banks. Hard inquiries remain for 2 years. So say you just went to go look at a car, you went to the dealership, you gave them your social security number, then you decided, I don't want that car anymore. They already pulled your credit. That's going to remain on your account for 2 years. So make sure if you are going out to a dealership, if you are looking to, maybe get a new cell phone and they're taking your social, you're looking through insurance companies and you're giving out your social security number, make sure you're not doing it too much because those inquiries do remain for 2 years and they do drop your credit score, at least that FICO score, at least 10 points every time you try to hit it. So make sure before you go out, like I said, really think about what you want to do, if you want to buy that car, all that, because everything that hits your credit report, every time you give your social out, either it gets lowered or if you're actually paying your bills on time, it goes higher. So your credit scoring, this is now with FICO. This is where your Equifax, Experian, and TransUnion send your credit report information to FICO, and then they look at your report, and this is how they base that score on. So they're looking at your payment history. Okay, that's at 35% of your credit score. Amounts owed is going to be 30%. Length of credit history, very important. You want to make sure that if you had a credit card from back in the day, maybe you were like 20 years old, 7 or 18 years old, and that was your first credit card and you still have it, make sure you keep it open. Don't put a balance on it. You don't have to, but I know after 6 months, sometimes they do close out the cards. So you want to make sure there's a little bit of activity on it if you could pay it off right away, but make sure that you have that oldest credit card because the length of credit history is very important. Like I said before, if you ever went bankrupt, that gets wiped out completely and you have to redo that over again. So your score just drops dramatically. Types of credit used. They also want to see you having like a car loan, um, a personal loan, a credit card. All of that helps with your credit score to raise it. So they want to make sure that you have different types of credit and you're paying on it. So that's very important as well. And new credit is 10% of that score as well. So if you get like a credit card offer, make sure you're not doing too many balance transfers because that does affect your credit score too. That does lower it. But they want to see also new credit on your report too, saying that, you're out there, you're looking maybe for a new car, you're trying to get a mortgage, maybe you want to do a home equity. That's new credit to them. So improving your FICO score. You want to try to repay the old delinquencies if you can. You want to try to pay consistently on time, keeping your balances lower than the limit. So if you have a credit card that's $1,000, you don't want to have that maxed out. You want to make sure that you're using at least 50% of less than that credit card because once they see your credit cards are starting to get maxed out, your FICO score does get lowered because they're afraid, okay, this person is using their credit cards and they're not paying them down. They're probably going to use the next credit card next, and it's just going to lower that credit score. You want to also make sure that, if I always say this too, this is just word to the wise. If you're having any kind of financial difficulty, yes, paying your credit cards off is very important. But if you're going to pay anything, make sure you're paying your mortgage or your rent first. Credit cards are always going to be there. And unfortunately, credit card companies really don't care about us. That's a company. And a lot of people use credit cards as extra income, and it's completely not. And we have to take that misconception out there because credit cards are not extra income. We shouldn't look at it like, oh, well, I have 50,000 credit cards out there that I can use if there's an emergency. You really want to have cash on hand if there is an emergency because you don't want to rely on another card, like a company to give you that extra money for emergencies. That's just something that I've been seeing a lot out there. Limit the number of accounts open, like I said, and then limit the number of credit applications made. Stop, even though balance transfers may look good, it also does hit you and it will lower your credit score as well. So you want to just look at all of this to try to improve your credit score. So if you're looking to establish or reestablish credit, if you're starting out from bankruptcy, if you're somebody coming out of college, maybe you just, you've never actually applied for anything before, there are ways to establish and even reestablish your credit again. If you had credit report before and you went bankrupt, you want to try to repay your old debts. Try to make payment arrangements. There's settlements out there that you can do. You want to make sure that you update the accounts in your credit report. But the best thing that I've ever seen, and actually I have done before, is I got a secured credit card. And there's also a secured savings account, secured loans out there too as well. What does that mean? That means if you come into cash and you say you give me $500 or $1,000, you just got your tax return, we put it into a savings, I can give you a loan on that money. So I can give you an actual $1,000 loan and we just keep it in that savings account. You can't touch it until that loan is paid back. Or we can give you a credit card for that. And that's the best way because that reestablishes credit. We're actually going on your credit report, and it doesn't matter how slow your score is because we have that money secured. So if you have trouble paying it, we're going to take it from the money that we have sitting in that savings account. Also, to make sure you keep your credit report accurate. You can also, to establish credit, you can become an authorized user on someone else's credit card. I've done this before. Make sure you know who your cosigner is. And that's what I'm coming out to tell everybody. I know we like to help family members, but if that family member doesn't want to pay their loan 1 month, guess what? That is on you. So make sure you know who you're co-signing with. If you don't feel comfortable being a co-signer, don't do it. I've seen a lot of people come into me being like, I co-signed on my child's loan. I was trying to help my mother out and they just can't afford to pay. Well, guess what? You get stuck with that. And now you are trying to make those payments because it's going to affect your credit. Even if you get divorced, which I have been through, I was still a co-signer on his debt and I was still responsible, even after a divorce. So, like I said again, if you don't feel comfortable co-signing or being an authorized user on someone's account, don't do it. It is a great way to have somebody get better credit if they're, this person is reliable, but make sure you really think about it before you sign your name on any loan documents.
We've had a bunch of questions come in.
Okay, go
If
ahead.
you, okay, so um, you can get one credit report per year from each of the vendors, and will those reports differ?
So they all should kind of have the same information. Some of them will differ a little bit. Some of them, each credit reporting agency, like the Equifax, Experian, and TransUnion, they might show a little bit of different information, but it should all be the exact, like they should have the same things on there for you. It should have all the same information, all the same depths. If they don't, and you're noticing that one report is different than the other, then that's where you have to look and see if there is a problem because we use Equifax at the credit union. So that's how we pull it. We only use one company. Other places use one company as well, which they might have reports of things that you're doing just on that alone. So you want to make sure everything is accurate among all three once you do them for the year. Like I said, it should show the same. I've seen it lately because of identity theft, where one TransUnion had things that I've never seen before compared to Equifax. And unfortunately, someone stole her identity and TransUnion caught it first. So these are things that you want to look at if you are going to do all three, but I would definitely, you have to definitely split them up. Don't do all three of them at the one time because you want to make sure, like I said, with the identity theft that's been happening, that's running rapid everywhere, you want to make sure you're splitting up. One in, like I said, January, one in July, one at the end of the year.
Um, why do I need a new credit card if I already have a few ones open?
You don't need a new credit card. They just want to see new credit some once in a while. So what I'm saying about your FICO score, you don't want to go out and just apply for a credit card because you want that new, 10% of your FICO score to go up. But if you're looking to maybe get a car or, maybe you wanted to refinance your credit, your interest rate on your car loan, that's something you can look into. But if you are just happy where you are at, don't get it, apply for any more credit cards, just stay where you are. Your credit card's not going to drop or anything. It's just looking if you wanted to actually raise your credit score. You would have to go and apply for a new credit card, but that's like I said, it's going to drop your score for a little bit and then it goes back up. So it's kind of like that's why I always say, even though they want to see, new credit happening on your account, if you're fine where you're at, don't touch anything.
Right. Are there ways to check your credit score without dropping your FICO by 10 points?
Yes. So that's why I'm going to bring that up, I think, after this one.
Okay.
It's annualcreditreport.com. It's completely free. It's not going to drop your FICO score because you get that one free a year. So make sure that when you're looking at your credit reports, like I said, you're only doing it once a year and you split them up. But I'm going to bring that website up for you guys so you can see where you can get it for free.
Would you recommend using national debt relief for credit card debt?
You know, these credit companies, these credit repairs, and that's what I was actually going to go over. You have to look out for different things. Like, are they going to collect a fee up front? They shouldn't, if you don't have money, they shouldn't be asking you for upfront money from you. Are they telling you that they're going to remove that negative information? Because no one can. You have to do it yourself. You have to put your own dispute through. There's no easy credit repair, there's no easy credit fix. Yes, you can do these national companies, but you have to make sure they're accurate because a lot of times what I'm seeing is they're trying to settle with your credit card companies and you're sending them payments, but they're not sending them out to the credit cards to pay. So your credit report is dropping lower and lower each month. And now it looks like you are 6 months no payments and your credit score just took a huge dive. So it could be you can actually settle with your credit card companies on your own. It's just it takes a lot of work and you would have to see if they can settle and you have to call them and let them know your situation. So for instance, I had a Capital One account back in the day and before I went through divorce, I couldn't pay it anymore. We had two kids, we were completely broke. So I called Capital One and I said, "Look, I know we owe 5,000. I can't pay it. We are literally thinking about going through bankruptcy." And as soon as they hear the word bankruptcy, and I'm telling everybody out here, credit card companies get scared. It's the worst thing you could possibly say to them. Then they try to work with you. So I'm not telling you guys to lie to them. But if you're looking to get help from your card companies, and I've learned this actually in the last 2 weeks, what actually works with them and scares them is bring up the word bankruptcy. I know that sounds horrible that we're messing with them, but they mess with us all the time by raising our rates and stuff. So just say that, see, and be like, "Look, I don't want to go through bankruptcy, but I do need help," and see what they can do for you before you go through these credit repair companies.
Is there any difference between higher scores like a 790, 800, 810 that will give more benefits, or as a high 700 is that going to give you the same thing for loans and such?
So for us, anything over it should be a 790 to about an 850, you're going to get the best rates through us. So we call it class A. We have like A, B, C, D ratings. Is the interest rate a little bit better? Yes, it is actually a little bit better the higher your rate goes. It's also like that, I think, at car dealerships as well. So when you're coming to us and you have like an 830 credit score, yeah, you're going to get the best rates with us. Is that achievable with a lot of people? Not really, because I even have a 740 at this point. Mine went from a 450 to a 740, and that took me about 4 years to bring my credit score up after everything that I've done. But I'm still getting great rates. So yes, if you want an actual better rate with banks and credit unions, and even car dealerships or mortgages, yes, you would want to see your credit score a little bit higher in the 800s if you're able to do it. Like I said, it's some people, it's very hard to do. I can't do it just yet. I'm trying to figure out, I know what I have to do out there, but you can raise it.
All right, and you might be covering this later, but if I want more available credit on my cards and I can't raise my income, what are some tips or tricks I can use to ask my credit cards for more available credit?
See, the only way you can get more available credit is to raise your income. So unfortunately, it would be looking like you would have to apply for a new credit card. The only problem with that is that if you're looking for more income on your credit card or more of a higher balance, they're going to ask you why you need that. Like, what is the reason behind it? What are you looking for that you need that extra, credit on your credit report? Are you going into problems where you have to pay something off? A lot of times, like I said, they're going to ask questions. You might have to get a cosigner, unfortunately, if you wanted to hire your limit on your credit card in order to get that bigger balance. They will look into your work history and all that kind of stuff and see how much you make. So just ask yourself some of those questions, like, why do I need to raise that? Is it better for me maybe to get a cosigner or get a personal loan instead of maybe a credit card for that? But yes, I mean, you do have to have actually, they want to see higher income with your job in order to give it to you.
All right, I think that's it.
Okay, perfect. All right, so we're going to go on the next one. We kind of hit beware of credit repair. So this is the one I wanted to show you guys. Very important. Monitor or repair your credit for free. Annualcreditreport.com is the only place I send anybody to. Make sure you are on the right website because I had somebody go and it said like annual and they spelled credit wrong and it was completely false. She put her social in and she had identity theft. So make sure it's annualcreditreport.com. You can review your credit report annually, dispute inaccurate information directly with the credit bureaus. You can go on here and check all three. What I'm going to tell everybody today is everybody's credit reports and their FICO scores and all that, everything should be frozen. What am I talking about? What I mean is you're going to go on to TransUnion, you're going to go on to Equifax, you're going to go on to Experian. You're going to set up a username and a password, and this should be completely free. It shouldn't be asking you for money. Some of the websites will say, well, it's going to cost this. No, no, no. You have to go on their actual website and actually sign up and do a login. So you're going to do a username, a password. It's going to ask you some information about yourself, like have you lived in this address? Where have you lived before? You're going to go on and you're going to ask, and it say right away, do you want to freeze your credit report? And you're going to say yes. What does that mean? That just means that if anybody that's not you goes out and puts your social in somewhere, they cannot open any extra credit under your name. Your credit cards are still going to work. Nothing changes. It does not change your FICO score. It does not do anything against your credit reports. It's not going to do anything bad. Nothing drops. Everything stays the same. It just means that if anybody tries to use it from that point on, it is frozen. And the only person that can unfreeze it is you. Why am I telling you this? Because I just got another form from Capitol Health saying that all of our identities were stolen. They had a breach in their systems. I heard that Social Security, everybody's socials at this point have been stolen. A lot of medical. It's happening everywhere. We're getting these forms in the mail saying your credit, your information was stolen. Please put a freeze. You're going to see it on any website. You're going to see people on TV talking about this. No one should have their credit reports open right now at this point if you don't need it. And it's very easy to unfreeze. If you go look at a car and you decide, oh my God, I want that car, you just go right on the website, you unfreeze it for one day, and it goes right back on the next day. That's it. Nothing changes. Like I said, your credit score stays the same. Your credit review reports all stay this. There's nothing negative against you. Your credit cards are still open. You can still use your loans that you're using. It just means no one can use it from that point on. No one can take your social and put it in the system. I have seen so many people having issues with identity theft these days. That's the first line of defense right now, is to make sure those are frozen. And like I said, after this, if you get anything from me, please do that right away. Do it for your children and do it for your grandchildren. We have a 5-year-old child with a $50,000 car loan. Their social was stolen by someone in their household. That's how crazy it is. So make sure your grandchildren, your children, everybody's credit, and you should go on for each person and freeze their credit. I just did it for my stepdaughter because she banks at TD Bank. $4,000 was taken out of her account because unfortunately an employee stole their information. I went to her house. We did it right away. It's just to protect yourself and to protect your household, to make sure no one is taking your social. It's just, I see so many people in different, like I said, of Capital Health, RWJ, everybody's, they're hacking into these systems and they're stealing our information. And it's just very important that we all do this. Oh, and two, if anybody needs help, please let me know. I can definitely sit down and do a one-on-one, and I can show you how to freeze your credit reports. I will go, through Zoom, we'll go together and we can freeze all three of them for you. You can even do it right on your cell phone, on your iPhone or your Android. You put an app on your phones and you can freeze them right there. I do know you like Capital One that I have here. I always get alerts from, I think it's TransUnion, and I froze it right through that, as well. You can freeze them even through Credit Karma if you have that too as well. So just make sure that you somehow, you go on and you do that freeze on your credit reports. So the role of money management, you want to make sure you do timely payments. You're paying down your revolving credits if you have them. You want to try to pay off your collection accounts, and you also too want to save for emergencies if you're able to. Make sure you're tracking where your money always goes. This is very important. And this is really important too with your credit cards. A lot of times we give our credit cards out to maybe a gym membership, or, you're paying for Netflix through your credit card. You want to make sure you're writing this all down, and you want to make sure everything that's on your credit report is accurate. So when you bring up your credit report and it's showing maybe like on your credit card, you paid for Netflix and it was like $500, you want to make sure that's just not correct. It shouldn't be happening. Make sure you're also, tracking your expenses. There's so many different apps on your phone that you can use. Keep your receipts if you're not good with tracking money. You make sure you're doing a budget if you're able to. Like I always said, sometimes in order to figure out if you're really struggling, if you are making every 2 weeks you get a paycheck, and all of a sudden your money is gone by Monday or Tuesday because of bills, something is going on. Something, you shouldn't be living paycheck to paycheck. And I know that's easier said than done, but you want to figure out, where can I stop the bleeding? How can I try to save money? The best thing to do is keep your receipts for at least a month. I'm talking about gas receipts. Anytime you get a Wawa coffee, keep those receipts, because if you need help doing a budget, we can look at everything and I could be like, why did you go to Starbucks for that coffee? You can make it at home. Right there, that's $8 probably that you could have saved. So these are things that you really need to start doing. Use credit or debit cards and really try to monitor your ATM use and taking out cash all the time. The worst thing to do is have cash in your pocket, because sometimes you don't get a receipt for what you spend it on, and it's very hard to track what you use cash for. It's easier to track when it's on a debit card half the time, or even a credit card. So that's something that I always tell people to try, not taking so much cash and using that if you're not willing to get a receipt. Biggest thing I tell everybody, live within your means if you're able to. Don't try to live like somebody else is living. We all have different incomes coming in. There's no reason to keep up with people. Just because my neighbor gets a Mercedes doesn't mean I have to run out and get one. Do I think that they can afford it? Probably not, but that's what people do out here. We're living with, above our means, and we can't afford some of the stuff. These car payments are absolutely insane. If you go looking for a new car right now, you're making a $600-700 payment on a car loan. That's insane. Back in the day, I used to pay $134 on a Hyundai Sonata, and that was brand new. So just think about how life is right now, how hard it is to make payments. Your mortgage payments, the mortgage rates right now, if you're looking for a new home, are at 7, 8%. They used to be at like 2%. Everything has changed. So try to live within your means. Your kids don't need everything. They don't need this new iPhone coming out or this new Game Boy or whatever game they're coming out with. Try to postpone things if you can't afford it. I always say everybody deserves to live because this is only one life we have, but make the best of it and try to do it. If you're going to look on vacation, we all should be on vacation and enjoying this one chance we have. But we have to make sure that we're doing it smart. We're saving for it. Maybe we're doing something that's close to home and not so far away, or looking for cheaper tickets to do something like a cruise, or something that's just affordable for your family. So when you do come off vacation, you're not scrambling to even make those payments. Because the last thing you want is to put a vacation on a credit card and then you're still paying that off 2 or 3 years later. Because now your vacation that just cost you 2,000 is actually up to $6,000 because of the interest rate on your credit card. So make sure, like I said, substitute things, reduce things, try to increase your income. Easier said than done. I always say that all the time. So that's why I always say prioritize your spending, because that's easier to do than asking somebody for a raise, because no one out there is going to give one of them to us. Try to delete your debt, reduce your interest rates. Like I said, aggressively repay your most expensive debts if you have them. Even if you have one credit card that's tiny and it makes you feel good just to pay it off because you have it, pay it off and then start with the big ones. Whatever makes you feel like you're accomplishing something, do it. But do it now, because your credit card debt is going to be there for almost over 30 years with the interest rate that they're putting on us at this point. Always remember to repay your debt while you're savings for goals. Do I always say you should have 6 months worth of emergency funds? No, because it's not realistic in this time of age to have that. You would have to have like $30,000 sitting in an account, and none of us pretty much can do that. So I always say in an account, make sure you have at least 1 month of your mortgage or your rent payment just for an emergency. No one knew COVID was coming, and when no one had that saved. And I saw a lot of people struggling to make their mortgage payment for at least even a month. So just put, even if you have that 1 month of your mortgage or even your rent, just put that into a savings account and don't touch it, just in case, God forbid, there is an emergency and you need something to make a payment with. So that's the best advice. And try to, while you're doing it's hard to do both, but if you actually have your payroll, anytime it comes in, you have your bank or your credit union just pull at least $5 to $10 out of your payroll without you seeing and putting it into a savings account. That's the best thing to do, because you're still savings. You don't even know. You're not even looking at your paycheck until it gets posted. But we already pulled $5 to $10 out. We're putting it into a savings account for you. And then you start paying off your debt too, as well. You're still paying your bills. It's the easiest thing that you could possibly do. So what are you going to do now? What are you going to do today? You're going to go and check your credit report. You're going to go freeze all three of them right away, because there's no reason to have it open if you're not looking to get a new loan. You're going to freeze your family members too as well. What you're going to do in the next 3 months, you're going to pull your next credit report. You're going to make sure things are accurate. You're going to make sure that the addresses are good. You're going to make sure where you actually worked is correct. All of that should be okay. Even if, make sure your student loans, if you have a student loan out there. I saw somebody that had a student loan that they never even went to college. So there's so much inaccurate information sometimes on these. So you have to take care, you have to make sure you're looking at all this. And what can you do this year? You are going to be smart with your credit. You're going to start savings. You're going to put at least your mortgage or your rent payment into a savings account for yourself. You're going to enjoy life. And you're also going to make sure that you are on top of your bills, and you're just going to be happy. And I'm here to help too. So if you need anything, please let me know. Like I said, I can help you do credit freezes. I can help you do credit reviews. I can look on that with you and kind of go over what your credit report is supposed to look like. So if anybody has questions, please ask me. And we also go through balance. This is something that I work with. It's our other company that we have. It's completely free for the credit union. It's a financial education and counseling service. They actually do the same thing that I do. There's more of them. They get back to you within 24 hours. They're so amazing. It's just an amazing group of people that work there. They do debt repayment options, credit report review, and so much more. All you got to do is cunj.balancepro.org. But I want to thank everybody that came on here today. Thank you so much for joining me. And if you have any questions, please let me know.
All right, thank you so much, Amanda.
You're welcome.
If anybody does have questions, again, please use the Q&A or the chat to get in touch with us. Somebody asked if you'll be sharing your slides.
Yes, I can send all my slides to you, Andrew, and you can
Okay,
send it out to them.
perfect. That is fine.
And I also have paperwork too that I want to send you guys as well. That goes over all this.
Okay. Um, can you briefly visit or demo the annualcreditreport.com site?
Ooh, let me see. I can get it. Look here. Let me see if I can. Unfortunately, I can't get out of this right now because it'll block me from everything. So if they need help with it, the annual credit report, I can do it one-on-one with them if they want me to. Let me see if I can do it. I don't know. Here. Do I have internet? Hold on, let me see if I can get, okay. Can you guys see this? Andrew, can you see it? Like
Yeah, yeah.
okay. All right, so everybody here can see how it says annual credit and it's not. It's secure source sense. It's completely different. But right here, annualcreditreport.com, and it says it right here, homepage. This is it right here. This is where you're going to go and request your free credit report. Andrew, you could see that?
Yep.
Okay. And also, too, they have here a link, protect your identity, frequently asked questions. There's so much you can do on here. And it's completely free for you to go on. So I just wanted to show you too before there, I'm going to go back to the search. I just want to show everybody here what I'm talking about. So these aren't anything you have to make sure you're on the right website. And this is what happens all the time because these places charge you and I don't know who they work for. So there's these 3scores.com. There's this secure sourcesense.com. I don't know. You want to make sure that you go on to annualcreditreport.com. Or if you don't want to do that, I'm going to tell you right now, go on Equifax, go on Experian, and go on TransUnion. And it'll bring up, and you can go on their actual website and check everything yourself. You could do that as well.
All right, let's see. How important is it to have the correct address on your credit report? I have a few old addresses on my credit. Should I remove them?
No, so your old addresses should stay on there. It's just the weird part is lately we've been seeing I have an address on my credit report from Costa Rica. I've never wondered, and it's crazy because I'm not the only one. I had somebody in another class. They're like, yeah, I had a really weird address and it's from another country. But it's been happening more and more. And that's why I just want everyone to check because if you see something that you've never lived there, yes, you want to get that removed. If you have lived there, keep it on there because the credit reporting agencies want to make sure that they know it's you because if you have to answer any kind of questions, those are the questions they're going to ask. Have you lived at this address before this address? But you want to make sure that when you're looking, even your employment, I had people there that said that they were working like in, I don't know what country it was, but it wasn't anywhere around here. And they're like, I have no idea what this is. So weird stuff has been showing on our credit reports lately. So that's why I'm telling everyone, please check them. Make sure your, like I said, your addresses and your employment and all your personal information is correct.
Is it better to have more credit cards for better scores?
So more credit cards is it's like you can have credit cards and you can have a lot of them, but is that bad to see that you have so much credit out there that it's available? So what happens is if you have a lot of credit cards and you come to me and get a loan, it's going to say your debt to income. And I want to make sure your debt to income isn't too high. So having a credit card and you not using that balance is still debt out there. That's how we consider it because you can go and get all of a sudden apply for a mortgage with me and go charge up all of your credit cards like 60, 70,000. And now you shouldn't be approved for a mortgage. You can't afford it anymore. So you really shouldn't have too many credit cards. Am I saying to close some of them out if you really don't need them? You can. You're going to take a little hit on your credit, but it's also too you don't want all of that credit sitting out there open. There's no reason for it if you don't need it. And it just kind of helps you out a little. Like it's like I said, it's going to drop your score a little bit, but in the long run, it's going to help you because there's no reason to have that much debt to income in your name. Because, like I said, when you go and apply for a loan and stuff, that actually raises your debt to income. And if it's too high, we're not going to approve you for a car loan, a personal loan, anything.
Um, is it good for your credit to pay the credit card before the statement date?
Yes. Yes, you can pay it before the statement date because you're paying less interest. So, like I always see, like once I make a charge on my credit card, I try to pay it off as soon as possible because I don't want to be getting hit by the end of the month for that interest that they're going to hit me with. So I pay it off before the interest hits. Once you get that statement, the interest has hit your credit card and you just earned the interest on the what you just used. So I pay it before so that interest doesn't hit our account. So yes, it's a very good thing to pay it off before the statement. So I always have my apps to look and I always make sure maybe like if I charge something 3 or 4 days later, I just pay it right off so that I don't get charged interest.
Mm. Um, do you use a paid monthly service to monitor your credit? If so, what company or services would you recommend?
I don't because I don't believe in them because I just do it myself. I make sure that I'm on top of everything. Some people do go through Equifax. They can go through TransUnion and they can go through Experian. They do have programs under their place that you can use that monitors it. But I have on all my credit cards, if something's being used, I have notifications constantly. So I even have the notifications on my app. So if somebody's trying to use something, it pops up right away. So that's one way you can do it. And then once you freeze your credit reports, no one's going to touch anything anyway. So you can really do all of this yourself and it's really easy. You just have to make sure, like, even if like Discover sends me my credit, like my FICO score sometimes. Capital One, I'll get a little ding. Go on Credit Karma. Even though Credit Karma is a Vantage score, it's not technically your FICO score. It still runs around the same and it still reports some of the same information. You could do that as well, but I don't see paying money for something that you can easily do on your own and have the apps on your phone or your computer and you get notifications if anything is going wrong with it.
Annual credit report lists the option to obtain free weekly credit reports. Is that a good idea or a bad idea?
They're just sending you like a little synopsis through an email. You can do it, but there's no reason to. Like I said, you can check your own stuff every 3 months. It's going to be nothing really changes. Like I said, as long as you have those notifications on your credit cards, like I get all the time, I constantly look and it says like credit wise on my Capital One changed. You can go right on there and it pretty much tells you what's going on your credit reports. You don't have to do a weekly report.
Do you provide financial education to teens?
Yes, I actually taught down in Bridgeton the whole junior class a couple months ago, financial literacy. It's tough because no kids are going into college understanding a checking or savings account. I do teach all over. I taught at Parkway Elementary School. I try to teach as many teens as I possibly can. I just some schools are just so busy, they don't have me in there a lot of times. But if anybody's looking for me to come out and teach teenagers any of this information, please let me know. I would love to.
Um, should we use virtual credit cards when buying online or tap to pay to hide our real card numbers?
Yes. I'm going to jump on that. Yeah. Why am I saying that? Because unfortunately, there's so many scanners on these machines. There was one on the Walmart at Nottingham. And there was one at the Walgreens on South Broad Street. There was a scanner at the ShopRite in Bordentown. And what I mean by that, that people are sticking these little scanners on to when you're putting your cards in. So the best way, I always say, make sure you have a tap card. Yes, you got to make sure that you know your phone is protected, and you want to make sure that you have a two-step verification on your phone. So not only do you want to do like your face recognition, you want to do also maybe a PIN number. But yes, I store my credit cards actually in my phone, and I just do a tap because I don't want anyone stealing even though credit cards are easier to get your information back, but I just think it's safer out there right now is to have everything stored in your phone. You tap away, you're not putting your phone into any kind of machine or anything like that, because right now, just I've been seeing a lot of fraud that way too as well.
How many credit cards is a good amount for a person or per family?
Five. I always heard five. And you know what? Even when I talked to somebody from Equifax, they told me five was good. Just because, like I have a Discover, I have a Capital One, I have a Sam's Club, I have a Costco, and then I have a Old Navy. And it's just different ones out there because there's no real reason to have so many of them. Like I said, it's not extra income. And I think that's where people are, looking at credit cards at, and we have to stop that. We have to stop thinking that getting a credit card with a $10,000 limit, ooh, look at me, like it's not extra money. This is a company that's giving you a loan that you have to pay back no matter what. It's not your extra income coming in. So I always say five in case of a really bad emergency. Say something breaks in your house and you have to charge something, then you have that available for you. But you want to make sure that you have the payments to pay it back so you're not paying all that interest.
Should we use our PIN number when tapping our card?
Yeah, that's the crazy part. So when you go to Aldi's, like I go to Aldi's on South Broad Street in Hamilton, I have to I tap my card and they still put my PIN number in. And I asked, I'm like, why am I putting my PIN number in? It should just be secure. And they said, because if somebody took your information and put it in the system, they still want to make sure that you're putting the PIN number because that's actually you, that you know that number. Is it secure? Yes. But what I always tell everybody is that if somebody's standing behind you and they're really close, there's no reason for them to be that close to you while you're putting your PIN number in. And you have every right to tell that person if they can please move back a little bit. I see a lot of this happening recently where people are so rushing to get out of stores that they're right behind you as you're trying to do your transactions at the registers, that it's okay to tell them to move back because that's how people's information is being stolen. And I don't want anyone looking over my shoulder as I put a PIN number in. Even if you're at an ATM, especially at these Wawas and Quick Checks, it's open to anybody, and anybody can be standing behind that aisle looking at you. Cover yourself. Make sure no one's watching you. Put your hands over the screen as you put your PIN number in, and it's okay. Because if that person gets offended, that's their fault. There's a reason why they're being offended because they're doing something wrong. Because if that person was smart, they'd be doing the same thing. So protect yourself. Don't trust anybody. Like I always tell everybody all the time, stop trusting people because you know what? People are I've seen a lot of this happening, and people are desperate, and some people have nothing right now. So you want to make sure that you're protecting yourself, because once you start trusting somebody or you think, oh, this won't happen to me, sometimes it does. And I'm not going to say, if you're ever going to have your identity stolen, it's just when. or when you're going to have your debit card stolen, or when you're going to have a credit card. It's all going to happen to us at one point, unfortunately. So make sure that, like I said, it is safe to put your PIN number in. Just make sure you're securing yourself. No one is around you. No one should be around you. That's just, I don't like that.
When you mentioned the five credit cards, is that for one person?
Yeah, I would say for one person. If it's a family, like right now, me and my husband, we have like he has about five, and I have two on my own. That's plenty because we both have joint credit cards together, and then we have ones that are separate just in case. So like if there's a birthday coming up, I don't want him to see it. That's how we kind of roll here. But you know, between everybody in the household, maybe if your significant other has five and you have three, you just don't want to be crazy where you're like, oh my God, I have 15 credit cards. Which one do I use? Because unfortunately, after 6 months, some of them even close out on you and you don't even know it. And it's just really hard to track. So the less, like I said, five per person. And I'm talking about like if you have a Kohl's, an Old Navy, add them into as well.
Does the credit union offer a secure credit card and can repeat the benefits of having one?
Yes, so we definitely do secured credit cards and we do secured loans. So what happens is your debt to income's high. I'm just going to give you something that happened that I just worked on with somebody. Their debt to income is high, too high, and they wanted a new car loan. So what I told them is they got their money in from their taxes. They owed $2,100 on credit cards. And if we paid off all three of them, their debt to income would drop. So we put $2,100 into a savings account. I gave them a loan for that. We paid off their credit cards and they were able to get the car loan in a couple months because their debt to income lowered. So what happens is you're going to come to me, you give me $500, $1,000, I put it into a savings account, and I could either give you just a straight out loan where I just put a check right into your account for that amount, or I give you a credit card where you can go and you have that limit, like $1,000 limit or a $500 limit, whatever you give me, and you can go out to stores and use it just like a regular credit card, but it's secured. So you can't get denied because we have that money just in case you can't pay it. And what it does is it raises your score because it's showing that you're able to pay that back. So what I did with a secured credit card is once I got it, I went and I charged right away once I got my secured because I went through bankruptcy, like I was saying. I went and I bought gas, paid it off right away. Then in 2 months, I went and bought a coffee and maybe a pretzel. And I paid it back in increments to show that I could still make my payments. But I was just doing it a little bit slower to show, yes, I'm not going to keep on paying it off completely. And actually it raised my score too. But we do it at the credit union. I know they do it at other banks as well too, but yes, we definitely do it with us.
What do you mean by credit cards stored on your phone?
So what I'm talking about is the Apple Pay and the Android Pay or the Samsung Pay. So what happens is you have this on your cell phone, right? I have Android. You go in there and you store your credit card information in there. So when you go to stores, Samsung Pay, it comes up and you just tap your phone actually to the register, like the little things that you pay at the stores, like Aldi's and all that kind of stuff. And you just actually tap your phone instead of taking out a card and you pay it that way. And it's called Android Pay or Samsung Pay, and it's called Apple Pay. You have to, and it's really easy to set up. You would just have to go on your phone, download that app, and it works itself. It just asks you for your credit card information. It stores it in there for you. So when you go and make a payment somewhere, instead of bringing your pocketbook and wallet, everything's in your phone for you.
Is possessing only one credit card viewed favorably?
Just one. Uh, they kind of want to see some. If you have one credit card, but then you have other things, like if you have a car loan, a student loan, a personal loan, they want to see different kinds of credit out there. So just having one credit card is good, but it's not going to bring you on the best score, unfortunately. It's kind of like these credit card companies, your FICO and all these credit reporting agencies want to see you kind of gamble. They want to see you if you're able to take out these credit cards and be good with them. That's what they're trying to do. It's like they're fishing you out there and seeing, okay, let's make sure she's good because if she's not, we're going to lower that score right away. So having one is great for you if you're able to just have one, but is that what they're looking for? No, they want to see a little bit more action on your credit report.
All right. So does that mean that not having debt is a liability?
Pretty much. It's sad. They want to see you have debt. And I know that's horrible to say, but they do. Like they want to see you have debt, but paying it. And if you don't have any debt at all, they don't like that and they lower your score. So it's like, I don't know who made this thing up where everybody should be in debt and paying their bills and that makes them happy. It's just, I try, sometimes I think about it and I'm like, wow, they want us to be in debt, pay our bills, and then our score goes up. But if you're not in debt, you have no debt, your score goes down and they're not happy with you. So it's just weird. But yes, they pretty much want to see us in debt paying our bills.
Um, Sometimes the credit card companies provide monthly FICO scores. Is that a
Yes.
current score?
Yes. So that's going to be your current score. That's why I'm saying even instead of going on there trying to figure out what your credit scores are and you're paying for these services to have like this identity theft blockers or protection, when your credit card company send you those scores, that's good enough for you because if something changes, you just click on it and it'll tell you what changed. And then if there is a problem, you just go on to Equifax, Experian, or TransUnion and you try to fix it. You dispute everything. So yes, those are the accurate scores when they come up.
Does getting the secure credit card lower your credit score?
No, no, actually, it's going to help you because it's showing that you're trying to help with your credit. It's because it's secured. It's something that even if your credit score is low, it's not going to affect you because we're putting money into a saving and securing that money. So if something should happen, and you can't pay it, it's sitting right there for you. So no, it's not going to lower your score.
Somebody checked one of their uh with the credit bureaus and they changed their name and nothing is showing on their credit report since they've changed their name. Should I reach out to them?
Yes, right away. Yes. If they change their name and nothing's showing up on their credit report, yes, you have to get in touch with them right away. Something went wrong.
Um, is it good practice to pay a credit card balance in full each cycle or have some unpaid amount?
So, in order for me to, because I even had to go through financial counseling. So, in order for me from bankruptcy, even with a lawyer, and it worked, to bring up my credit score, I used to pay off my credit cards every month. And then they told me, well, actually, what actually works and helps is that if you leave a little bit of a balance and then make like 3 months worth of payments or 4 months and make sure that's paid off. So, you really want to maybe if you have a credit card that's a little bit higher, make some monthly payments and then pay it off at the end because I want to see you actually putting interest on it. It's really weird, but it actually raised my score. So yeah, you want to pay it off if you're able to, but make payments towards it too as well if you can.
Mm. Can you request your FICO score from your credit card company? I don't recall seeing that.
Yes. So my Capital One does it for me automatically. Let me see. I'm just bringing up Capital One on my phone. Um, let's see. I think it automatically does it for you. If you, oh no, you have to request it. So yeah, it's called CreditWise. It says check your FICO score. So it's called CreditWise, and this is through Capital One. Um, and it will actually send you a credit score, and it's just sitting there. It's completely free. It doesn't affect anything for you, doesn't lower it, but it will tell you every month if something changed or there was something. But yeah, you would have to go through your credit cards, and it should be on there.
Can you repeat again how a secured credit card is different from a standard credit card? And is that a good way to start for a child?
So Not a child, but I would say a teenager if they're looking to establish credit and they're maybe 17 or 18. So what you would do, like I said, a regular credit card, it's going against you. There's no security on it. It's going against your credit score. It's going against your income. They're looking at how long you've had, they're going by your FICO score. There's nothing secure about it. So they're going to give you how much, they're going to look at your income and all that kind of stuff. With a secured credit card, they're not looking at any of that. You're just handing me cash, 500 to 1,000. I'm putting it into a savings account and I'm giving you a credit card on that. There's nothing I'm looking at because that cash is sitting there because if you can't pay, I'm just taking that cash and paying off your credit card. So it's too different. I'm not pulling your credit score or anything like that. I don't care what your credit score is for a secured card. I don't care what's on your credit report. But with a credit card, an actual real credit card, yes, I care about all that stuff. I want to make sure you're going to be able to pay this.
If you request your score from your credit card company, is that interpreted as a red flag?
No, if like you want to see what your credit score is from the credit card company, no, it's not a red flag at all.
How does your mortgage payment or late payments affect your score?
So mortgage payments, oh God, when you miss a mortgage payment, it's very detrimental, unfortunately, because it's such a big payment. Um, because I've seen this happen before, it can lower your score tremendously. I've seen 30 points by one late payment going in, and it sits there. And because you have a late payment on your mortgage payment, which is the most important thing that you should own, it's a big red flag for everybody. So they're going to look at that like, oh my God, you can't even pay your mortgage. They think it's the worst. So that's why I always tell people, like when I see somebody making their credit card payments and their mortgage is late, I don't understand it. Pay that mortgage first. Pay the most important thing is your home, your medical insurance first. Don't worry about the credit cards. That's just like they're always going to be there and you can work with them. You can't work with a mortgage company. They don't play around. They're not going to sit there and be like, "Oh, it's okay." No, they're your mortgage. Once you have a late payment on your mortgage, it really affects it and you really want to try to get that fixed as soon as possible.
Um, what are the what are the elements lower the debt to income ratio, and what elements make higher the debt to income ratio?
So debt to income means that you just have so much debt open out there. What you want to do is you want to make sure that you don't have a lot, like I said, you don't have a lot of credit cards. You don't want to have a whole bunch of balances sitting out there like you know, like a, oh my God, student loans, a mortgage, car payments. If you're even co-signing on someone else, that goes on your debt to income as well. We usually want to see your debt to income lower than 34. So they base it out of a score of 100. All right. And we go and we add up all of the debt that you have, and it goes against your income that you have coming in. And if your debt's higher than the income coming in and it's above like a 34, we don't approve you. But you can also go online and there are places that you can go check to see what your debt to income is. And if you have applied for a loan recently somewhere, you can even ask them what that was because that automatically comes up. You want to make sure your debt to income is lower, especially if you are looking for, personal loan or a home equity or a mortgage, because if it's too high, they won't approve it over a 34. And like I said, you can go right online and Google it, and there are calculators out there for you.
How can somebody get a secure credit card?
Honestly, you just walk into you can go on our website, thecreditian.com. You can go right on there and apply for one. You just put money into a savings account and they automatically give it to you. You can go right into a bank if you wanted to. You can do any of these. There's even some online. They have online banking too as well. Everything can be done online now. But if you feel more secure, you can just walk into the credit union, just sit with somebody and you could do it right there with them.
Alrighty, well, thank you so much, Amanda. We really appreciate your
No
time.
problem.
And if anybody does have any more questions, you can contact Amanda. Her email is in the chat. I'll also be sending it out in a follow-up email as well. So we really appreciate uh, everything. So everybody be safe, be well, and hopefully we'll see you soon.
Thank you guys so much. Thank you for all the questions. This was awesome.